Joining us right now is Chevron's chairman and CEO, Mike Wirth. Hey, Mike, thanks for taking the time to talk with us this morning. What did you see in the quarter?
Yeah, good morning, Becky. It's good to be here. It was a quarter that I think was probably a little light versus what Wall Street expected. A hard one for them necessarily to forecast. We had higher maintenance, which reduced volumes. Refining margins came off pretty hard in some markets. And we had some one-time items that are pretty tough to forecast, like well write-offs and some tax items. So underneath that, the execution is strong. Our growth remains on track. We had really strong production and superior shareholder distributions. In the first half of this year, we had record production in the Permian. Our U.S. production is up 17% first half of this year versus first half of last year. And distributions to shareholders are over $50 billion over just the last 2 years. And that's versus our market value of $280 billion. So a substantial, steady return of cash to shareholders. And we're on trajectory to deliver industry-leading growth with projects not only in the Permian, but the Gulf of Mexico, Kazakhstan, our chemicals business that are going to come online through 2026 and deliver a free cash flow compound annual growth rate of more than 10% over the next 3 years, and Hess will just enhance that. So underlying execution is strong, growth is strong, and we're very positive about the future.
Okay, you pointed to Hess as being something that's going to help you throughout, but there have been questions about whether that's going to be allowed to go through, or at least whether the Guyana properties will be something you'll be able to acquire as part of that. And of course, that's the reason you're doing it. Where do things stand right now? What's the timeline, and what are you telling investors what to expect?
Well, we're moving through the approval process with the FTC, which is, making good progress, and looks like it'll close probably by the end of the third quarter. Although with government agencies, these things aren't always easy to predict. On the dispute relative to this contract in Guyana, there's now been a date set for an arbitration hearing that will occur next year, and we continue to believe this is a pretty straightforward case. It's a contract interpretation of language in a confidential agreement, and we're confident that that process will affirm our interpretation of the contract. So this is taking a little more work and a little more time than we had initially anticipated. But in the fullness of time, this is going to be a great acquisition for our company. We look forward to integrating with Hess and believe this is going to create value for shareholders for decades to come.
Mike, Darren Woods was just on with us earlier this morning, and he says he's pretty confident that Exxon's view is going to be the one that wins the day with arbitration. There's a lot riding on this. What happens if the arbiters don't come down on your side and you can't go ahead with this acquisition?
Well, we have indicated that there's a closing condition in the agreement that relates to this, and if that were to be the outcome in the arbitration, the transaction wouldn't necessarily close. We think that's a low likelihood. And underneath, the Hess transaction, as I said, we've got strong organic growth underway across a number of our businesses. Free cash flow growing very strongly with a strong balance sheet and record distributions to shareholders happening. And so that's all the base case. And as I said, the Hess transaction makes it even stronger. So we feel confident in the outcome on the arbitration, but our hand is very strong, in the base case as well.
That deal, the Hess merger agreement, terminates the end of April, I believe. What happens if the arbitration hasn't been settled by then?
No, the actual long stop date on that is out past the end of April. It's toward the end of 2025. So there's still a long time that runs on the merger agreement itself.
Let's talk a little bit about some more news that you have out this morning, and that is the fact that you are moving your headquarters from California, where that company has been based for, over 130 years at this point?
145 years.
145 years. You're moving from California to Texas. What happened?
Well, we've got a proud history in California. It's been our home. We started out in 1879 in Pico Canyon. We're known for much of our history as Standard Oil of California. And we have big businesses here that will continue with important customers and employees that we're very proud of that do a great job. Houston is the epicenter of our industry, and it's where our partners are, it's where suppliers are, it's where our key vendors are, and the universities we hire from. And actually, most of our employees are now in Texas. So we've had our headquarters gradually growing in Texas and gradually pulling down in California. This is a continuation of a trend that has been underway for some time. It will get everybody together, and I think it'll improve the pace of decision making, the degree of engagement, both internally and externally, and it's really the right place for our headquarters to be. Our businesses in California will remain there, and we'll have hundreds of employees supporting those businesses and thousands of employees that work in the field in those businesses still in California.